Hi, everybody. John Haldi here, and I'm excited to have David French, the founder and CEO of Fortitude Insurance, with me. David, how are you?
John, doing great, man. Thanks for having me.
And joining me, as usual, is David Cooper, also with Haldi Tech Services. And we're excited to just pick your brain, Mr. French. And for those watching, most of the time I'm going to say David, meaning Mr. French, but hopefully Cooper, or I might just say Cooper when it's David Cooper. It's already got me confused. But David, thank you for taking the time today. We got a chance to meet not too long ago in Miami at one of our other events, and Dave Cooper and I were extremely interested to learn more about you because we've been living in the FedEx world, and that's a fairly new one for you on the line haul side, I think, correct?
Yeah, yeah.
But you've been making hay, as it were, out in the Amazon world, and I think you've got some experience with the FedEx P&D folks.
Absolutely. So, in the beginning, when I formed the agency, similar to all of us in our journeys, right, we kind of find our ways into different niches, if you will. And I did start off a lot in the construction and aviation space, for insurance, which it's a different beast, but at the end of the day, policies are policies. And anyways, I'd opened the company and COVID hit, and I'm sitting at home contemplating my life decisions, right? And as I'm sitting there looking out my window, and I see these, prime vans driving by, and I'm like, you know what? I'm like, this is interesting. And it wasn't just for my wife ordering from there because trust me, she does plenty of that. So anyways, I ended up going out there and I wasn't too
You didn't have
sure.
your own dedicated driver like mine?
No, well, I think we have two dedicated drivers. Okay. Um, but so what ended up happening is I went out there and I wasn't really too sure about the business at the time. Um, I pulled over one of the drivers. I started asking questions. He was delivering. I'm like, hey, what's going on? You deliver for Amazon? Oh, you don't. Well, who do you deliver for? Oh, okay. Well, where's your station? Anyways, one thing led to another. I found out they're independent contractors. That led to me during COVID going to one of the last mile stations, walking in unannounced, masked up, getting, temperature checked on your forehead, and just funny enough, they just let you right in. And so I'm walking around checking out everything. And 5 years later, I'm pretty deep into the last mile line haul space. And it all started, from that one day in COVID sitting at home.
They let you just walk into the Amazon terminals?
Dude, would you believe, right? I walk up. Of course, you're
Your
masked up. They
clothes come
had
out.
you they had you gloves and everything like that. But I just walk up and look, as an agent, like to say we're like part-time, private investigators. I search for everyone. I know people's names. I do very extensive search to find leads, right, and whatnot. So I knew the folks that I was trying to find. Didn't know what they looked like. So I come walking in. I found out that this station had, 7 independent contractors out of there. And so I walk up. Hey, I'm looking for John. And yeah, okay, go ahead and go through the line. Go through the line. They scan me. Everything's fine. And I walk through. I'm like, okay, do you know where John is? They're like, oh, which company? I didn't really even know what his company's name was, right? I just knew one guy told me his boss name was John. So, anyways, I just started walking around and started asking him, hey, where's John? Where's John? Oh, you're an owner? Hey, can you tell me a little bit about this? And I love business, man. So I just sit down and I can pick brains about, how the operations work, and then I'll slowly roll it into, workers' compensation, auto liability at that point. But it was, yeah, they let me right in.
Dude, because one time in my life I got to go to a FedEx terminal. A FedEx owner took me and signed me in and did paperwork and had to send something before just so I could see what it really looked like. And it was a lot like in the movies when someone goes to visit someone in prison.
Get held in like a holding cell waiting for him type thing.
Yeah, I mean, like, the turnstiles and the security guards and the metal detectors and the why are you here? And let's check this paperwork. Are you on here? And this and that. And finally I get in there and I'm like, what is the big to do?
Yeah,
It's just a loading dock.
yeah.
So it's
I mean,
very different.
Think about
I'm going
this
to go
though.
to an Amazon place.
FedEx, well, I'm willing to bet that's not the case anymore, right? So let's think about this. I went probably May of 2020. So really, Amazon launched their, equivalent of the P&D side, right? Their ZL is what they call it, late 2018. So they're like a year and some change into this, and then bam, they got smacked in the face with COVID, right? So all these people that were running for a year, routes ramped up, and it was just borderline chaos, right? So I just, timing, man. Like a lot of things in life, timing.
You think it's a little lockdown now?
A lot of it. But hey, the harder you work, the luckier you get, right?
That's an
So,
awesome introduction. That's an awesome story. That is
Yeah, but
digging and finding business, right?
yeah, so but I mean what that ultimately led me to do is, I mean, man, the way also I'm going when I'm on the road, if I see a FedEx truck, every single one of them, say the company name right there. If I can pull my phone up and scroll through everywhere. If I'm driving to Georgia, my sister lives there. I'm, going. I don't text and drive, right? But what I do is when the time comes, I will take pictures. And as I'm going, I'll jump on Teams and hit up my team, be like, hey guys, who's this? Do we have them on our lead list? Look them up. So that's how I'll go ahead and I'll start collecting my data, is taking pictures and doing that. But that's just, what you got to do.
so you're like the stalker parked outside the terminal yard taking pictures of trucks sometimes?
Yeah, I haven't gone that far yet. I've actually scoped out a few and debated that. Yeah, yes, actually, it's been a thought. Let's just say that.
And your business is not that old, right? You were a I don't want to say COVID baby, but when did Fortitude start?
Yeah, actually, we just had our 6-year anniversary. So thanks, man. Thanks. It's pretty cool. It's funny. You see all these stats. Oh, first year businesses, fail 98% or whatever it is. So many of them only stay under $1 million in revenue and all this stuff. And when you're in the thick of it and you're rolling hard, you don't see that. You just keep working, right? And anyways, I walked in, my staff had balloons everywhere. They're like, "Oh, happy birthday!" I'm like, "Oh, shit, 6 years. Yeah, you're right. Hit a milestone. Cool." But yeah,
What
yeah.
am I
So we've been
doing with
around.
my life? Why am I
Yes.
here?
Exactly.
Start questioning things, right?
Yeah, it's
Let's
like,
breathe a bit.
dang, is this really what I want to do? But yeah, I've been doing that, and like I was saying, what it kind of brought me over to the FedEx side was I started noticing names on the side of these trucks. I'm like, well, dude, if this is it for Amazon, maybe it's this way for FedEx. And so a lot of my stuff is boots on the ground, learning, just me hitting up, asking questions, and not being the smartest guy in the room, right? Hey, look, can you explain this? What does your contract look like? Why? Wait a minute, you mean they cover your liability? Ooh, Amazon doesn't. I have to get liability over there. So wait a minute, then you're just NTLPD? Oh, and workers' comp? All right, great. And so really just through a lot of questioning, growing. I have the carriers. I have. At the end of the day, for me, insurance is the easy part, right? It's just the getting in contact with the folks and getting them comfortable with myself and my firm.
You mind if I pick your brain about insurance for a couple minutes?
My favorite topic. Talk to me.
I'm gonna be like in Groundhog Day, the nerdy guy who wants to talk insurance all the time,
Yeah, I know, right? Because not many people come up with me with that, by the way. So, tread carefully.
right? You're an independent agency, right?
Correct.
And that
Correct.
means that you rep or sell policies that you can place with different carriers that you have a relationship with, right?
Correct.
Um, you get a commission and they handle the actual underwriting and the claims processing and all that stuff, but you're the front man, if you will.
That's exactly right. Yeah.
And so you mentioned NTL and FISDAM and workers' comp and primary liability a little earlier. So those are each different lines.
You're exactly right. Under each policy line has their own policy with it. Auto liability has a 150-page, policy with that. Physical damage, sometimes it's stacked in with liability, sometimes it's separate. Workers' comp, they're their own standalone policies that respond to that specific risk.
Do the carriers offer bundled benefits to say, hey, if you do work comp and FISDAM and NTL with me, I give you a discount. Like with me personally, if I do my
Yeah.
auto and my home and my whatever, I get a discount through Travelers or whoever I'm using. Does it work that way in commercial or not so much?
I mean, yes and no. So look, here's like the difference between commercial. There's a lot of differences between commercial and personal. Me personally, I don't do personal stuff. I had the opportunity, so many people ask me, yes, I have Progressive, I have Geico, we can't quote all that. And I do have personal items on the books. But for me, again, I like business. Business is not as emotional, right? It's more of like a business decision. So with that being said, underwriting is kind of different as well. Personal lines, you stack with you, it's lower premiums, right? So if you get more of it, they can go ahead and get those little discounts by applying that. In the commercial world, I mean, sometimes underwriters, if I get the right underwriter and I get their ear, and I'm like, hey, look, we have a better option here. What they'll do is they can go ahead and work with their rates a little bit to try to make it attractive to put it all under one carrier. So, but they don't have like you know what I mean, a
The
bundled rate, if you
multi-policy
will.
discount,
Yeah,
right?
yeah,
Yeah.
yeah.
Okay. Now, in your world, though, I'm just fascinated by this because I don't know the insurance world, so I'm going to ask some dumb questions. So you have multiple products you sell, right?
Oh yeah.
People with multiple children will tell you officially they don't have a favorite child. But if you put enough drinks in them, they have a favorite child.
Yeah.
Do you have a favorite product? Is there one product that's more profitable, that's easier to deal with, and you sell the others because you have to, or how does that work?
That's a great question. There's some that is less admin work, I guess, and a little bit easier. Um, to me, auto and auto liability is fun. It's cool. It brings larger numbers, right? Premium wise, just because of what it is. Uh,
For the
but
primary?
it's correct
Right.
for primary liability. But it's super tough, man, and it's a heartbreaker. And there's not many markets. There's been so much legal issues with this. I was actually talking with someone out in London. We work on putting like programs together, and if you don't know, Lloyd's of London is like the stock market in America, right? How New York stock market is like the everything for stocks. In London, Lloyd's of London is where they trade insurance on the back end, right? And anyways, you go to London, and I was talking with them, and they're like, "Oh, we don't want to get into the USA." I'm like, well, why not? You're issuing $1 million limits in Africa. Like, well, why would come over here? Oh, your legal system is so tough. But there's others, like workers' compensation. For the most part, most carriers, if they have the appetite, they'll quote it. And I just need to know, hey, what's your payroll? We dive into safety a little bit. Not all agents kind of really dive into how to control workers' compensation costs. But workers' comp, there's a bunch of players that are in the space, and that is the most profitable out of all insurance lines right now. Workers' compensation is the most profitable, so carriers are eager to bring that premium on because their data analysis say that this is the most profitable line
For the carriers, for the agencies, or both?
for the carriers. You know, I get my commission. What I mean? Whatever happens on the loss ratio at the end of the day, that's our commission. That's how we get paid. We all have our ways of revenue coming in. Mine is typically a percentage of what the premium is.
True or false? You guys keep like 40% of the premium.
Man, that would be nice. That would be nice. False. It's like a quarter of that. Yeah, no, I mean, look, it ranges anywhere from 8% to 16%,
Okay.
depending on the line, depending on the carrier, depending on if they have an initiative. I mean, there's a lot of fluctuation that goes on involved with that
So
number.
I'm a little bit curious. We've been diving into a new venture with a lending service where we have some banks, and what we've found is that a bank can be very hungry today for a loan with a contractor, and something could go wrong in 3 months from now, or they just put too many loans out and they don't have any more money to give, and all of a sudden they're not willing to give, and their rates are shooting up for the same guys, right?
Yep.
So things fluctuate on a regular basis. Do we find the same thing with the guys underwriting these?
Bro. I had a heartbreak Friday, right? And was such a tough hit. So going to Amazon side, right? Look, on FedEx and everything, I would love us to dive into captives and the workers' comp carriers. I'm just sharing this one particular heartbreak on the Amazon side. It's tough, dude. The auto liability piece, like I said, it's a heartbreaker. There's so many carriers that have jumped into space. They jump out. Some want to start small. Some are all in. Pricing is wild. Some people, I call it racing to the bottom, right? What they do is they just quote as low as possible. They try to grab market share, and then 2 years goes by, and they're like, oh shit, we totally underpriced this, and we're not profitable. And then instead of fixing, they just bounce. They're like, we don't want to be here anymore. So what happened was I had a very, very, very large carrier. You see them on commercials. I'm not going to drop their name. Um, and they have like the specialty division. And dude, I sat down, I put work in with them, right? And I got them on board 2 months. I was planning on meeting the underwriter, got them on board with it. They started looking at this. Hey, we're going to give you $2 million of premium, which isn't really that much, right? That in the Amazon world, that's like 6 accounts, 7 accounts, right? To do a test pilot. Let's go. Like, all right, cool. So we start going, we get a first account on the books. Marsh is also working with Amazon, right? And on the liability side, Marsh does like some wild stuff randomly out of nowhere. They're like so low, no one could even touch it. And it's like, what are you doing? And then on the other end, they're so high, it's like, what are you doing? There's no rhyme or reason. Dude, so tell me how we bound the account with this company, right? And Marsh came in like 120K lower. I was like, whoa, what the hell? You know, I call up the company. I'm like, hey, look, do we have any room? I know this is our first binder, but we still have like 20 in the hopper that we're looking at that we are competitive on. Should we just pass on this, or what are you thinking? They're like, wait, what? What happened? Guys, 2 months. I bound the account, right? Told them that we're trying to get lower, that she might go to to Marsh. And in 2 days, they cut me off. They're like, never mind, we don't want to do this anymore. My guys, like, whoa, hold on. Like, you can't stop on your first bump. Like,
The,
what's going on?
the
And you want to,
underwriter just pulled up stakes and said, never mind.
yep, 2 months of work, dude. Grinding. Got the promise, got my staff fired up about it because, I mean, and this name that I brought in was massive. I mean, I already had big plans in my head. I was so freaking fired up about this. And anyways, he got spooked. You ready to hear the wild thing? Is I ended up going back and forth, and the client has been with us for so long. Again, in the Amazon side, Marsh is very in bed with Amazon, and like that means they have full sight into your business, and you're sharing information. Amazon influences how claims are paid out, um, or so that we think, right? But we're pretty confident, right? And anyways, what ended up happening with that is after talking with her and all the services this carrier brought, she's like, okay, David, I get there lower. We're going to stay with you. Like for $120, dude, I wouldn't have stayed. You know what I mean? But she did. And so I go back to that carrier. I'm like, hey guys, I'm like, what's up? I'm like, let's roll, right? I told you, why are you running from Marsh? No, there's so much opportunity. Uh, Congrats, David. We'll honor this one, but we're still not doing it. So yeah, David, dude, it's wild. Their appetites change, and carriers are like ex-girlfriends, man. They have a long memory, and they will remember anything that happened 10, 15 years ago, and they're like, we don't want to write this business now because of that.
Jesus.
Yeah.
I mean, I kind of want to have a moment of silence here.
But I mean, look, man, we've all been in our business that have ups and downs, right? Get knocked down 8, stand up 9, and there's going out and just trying to make it happen again.
So you mentioned captives.
Yeah,
I find them fascinating because I have a very simplified view in my mind of what it is, and I'd love for you to get me straight.
sure.
My understanding is I have a policy with you. The underwriter has 10,000 policies like this, and I'm insuring against things I can't afford to deal with, not the $100 issues, but the big ticket things.
Catastrophe. Yeah.
If I'm the lucky one, I never make a claim. and all my premiums kind of thrown out the window, but I'm covered if I have to. If I'm one of the unlucky ones, I get paid out multiples of what I paid in, presumably. And so it's all about pooled risk, right? If you need it, it's there. If you don't, the money's gone, right? And a captive is about hand picking who you're in the pool with and hopefully getting better risk because the fewer percentage people that need that payout, the lower
Yeah.
the premium should be. Is that right?
So it's not that the lower the premium would be. So let's take a step back. Yes, you are absolutely right. The concept of a captive is you go ahead and you get, there's a few different captives. We're going to be talking about group captives because that's what really is in our space, right? And so what group captives is we're going to go ahead and we're going to take a group of like-minded individuals, right, that have a certain premium threshold. Because captive, if you bring in like a $20,000 premium account, the risk is so high, like you're not going to be able to cover that. You need sizable premium in a captive because, look, I've seen, I cannot tell you how many workers' compensation claims in the hundreds of thousands of dollars. If you're paying 20 grand, you still could have that hundreds of thousands of dollar loss, right? So they want to make sure that the premium is there to make up for it. So the whole idea is you go and find like-minded, safe individuals, and if you perform well after your policy closes, which is 3 years, typically, depending on the state, after the policy expires, if you didn't touch that capital, that money that is intended to pay for claims, that comes back to you in the form of a dividend. So it's not that your premiums go lower. They're still going to adequately rate you for your risk because you want to be able that you are funding your premium bucket because it's your dollars now that are paying. If you go through that bucket that you put of your premium and you go above it, you're reaching into your pocket to replenish that bucket. So then it goes down. The captive can have, the group jump in and help out. Everyone contributes if you go through that bucket as well. There's a lot of different facts with that, but yes, in what you're saying, very similar terms.
So you're taking on a little bit of risk with other like-minded people.
Mhm.
And if it all goes well, your net expense eventually comes down by getting a dividend back on some of that premium.
That's exactly right. Yeah.
And so captives, is it fair to say captives are more prevalent in the type of coverage where the policyholder's behavior can impact things?
Yeah.
Whereas
Yeah.
meteor falling on your house isn't the type of thing you do in a captive because who the hell can control that, right?
Mhm. So captives are a liability. And so to really go after that, that's the biggest thing, liability. We can do physical damage and workers' compensation. We can tie that in. And what happens with certain captives, when you say meteor falling through, you really don't see captives for these property holders, right? Because they have insurable values of like $100 million. That's like a lot. What they're trying to do is they're trying to find the liability on the workers' compensation, and why it works for Amazon and FedEx, because even some of the larger fleets, uh, the total insured values aren't, hundreds of millions of dollars to insure that.
But generally speaking, as a rule, when you look at a captive in Amazon or FedEx, you're probably going to find, let's say for workers' comp, you're going to find larger companies who are very focused on managing their claims and
Safety and
reducing risk
claims.
by having a good safety program.
That's the captive manager's job, is to go ahead and vet, and you see that through loss runs. There he is. Dude, you were grinning the whole time, and when you got froze, I was like, did he freeze, or is
It's
this like
really
really
weird, huh?
intriguing him? you know?
So, so we had a car wreck. This is pre-Christmas. A car wrecked like into the AT&T box across the street,
Oh wow.
and we like. I apologize. It may cut out again. If it does, I probably won't even hop back on. But like ever since, we've had the worst internet connection in my office, and can't really get away
So
with it.
AT&T's tech guy did a MacGyver and used duct tape and bubble gum to try to repair it, something like that.
They were literally in the office this morning, right? Like at 12, like 12 to 12:15, we didn't have internet in our office. Everybody went out to lunch, but like we knew that we weren't going to do it, and the guy was here. And I told him, I was like, I said, ever since the car wreck happened, blah, blah, blah. And he goes, what are you talking about? I was like, there's a box. And he's like, I don't even know. And he says it wasn't their box, but I'm telling you, ever since that car wrecked into that, we've been having problems.
Time to get a Starlink.
Mm-hmm.
Yeah, right. That's it. That's it.
Might be right.
So we were talking, David, a little bit about captives and Cooper, that is, and David French was about to, I think, give me a classic education on how it's liability, he was saying, and you try to control your risk by having the better guys in there. And I think he was about to say that you wouldn't want to let someone into your captive who's playing fast and loose with safety stuff, and you wouldn't want to put someone in who doesn't care about claims and just sends everyone down the workers' comp pipeline.
John, you're stealing my thunder, man. You're stealing my thunder. Yeah, no, but you're absolutely right. So the underwriting process. So for me, when I look for my captive clients, I want to clarify something. To your point, captives are not for everyone, right? I find that there's a lot of selling of captives versus educating on captives. A captive is a business decision, right? This is something that you're jumping in, that you are going to be part owners of an insurance company, of other folks that are insuring their businesses as well. There's two captives, homogeneous and heterogeneous, right? One that goes ahead and insures the same type of risk. So these FedEx captives are only really insuring contractors, right? And then the other one is they take multiple risks to spread that pool of risk, what you're saying, John. So that way, if that trucking company, takes a bath in losses, that $100 million construction company is like, doing just fine. So there's two different types of captives on there, right? And so as an agent, what we do is I do a little pre-vetting, because a captive is not for everyone. Not only just size, but to your point, I have some folks that, insurance is a necessary evil. I don't want to be involved. They're out to get me. And like, David, why are you doing this to me? It's like, it's not me. Your losses are terrible. Have you done a return to work program? What's your turnover rate on your drivers? Like, there's questions that certain folks are a lot more serious than others, right? And as a captive, you want to bring in those serious ones, because you're getting in bed with them, right? At the end of the day, their business could impact every single one. So we're the front line, right? Then we take it, we do this mission out to the captive. Captive reviews, they're going to go and confirm what your policies and procedures look like, your risk management that's put into place. How do you handle your workers' compensation claims? Do you do a return to work? How about their make sure no indemnity claims, your driver turnover, how do you make sure, are they pay good, or their health benefits? Believe it or not, that's a big deal, because if there's no health benefits, I mean, I'm out playing basketball and I twist my ankle the night before, it makes sense to try to walk straight coming in and limp on the way out, right? If there's no health benefits, right? So there's things that they vet heavily on that. And so the whole idea is to try to get those well performers that have that like mind, because John, you said a little bit of risk. It's more than a little bit. I want to say it's a lot, but it's not a little bit. You could come out of pocket some substantial money in certain years.
But generally speaking, if you've got a fictional pool of 1,000 contractors who are getting workers' comp,
Mm-hmm.
and 50 or 100 of the ones who have their shit together, pardon my French, are in a captive, and they're managing their risk better, if you will, than the other. If there's 100 in there, the other 900. Insurance companies set their premiums based on the pooled risk they're insuring. So if you're
100%.
a contractor who thinks they have their stuff together and you don't go into a captive, in theory at least, now you're in a pool of risk that's not the 1,000, it's the 900 who didn't qualify into a captive.
Yep.
So you're kind of a higher risk bucket, right? And hence probably higher premiums.
Yep, that is part of the talk point on captives. Yes, they say, they take the top performers with the higher premiums, and the ones that are on the outliers are stuck with the standard markets. The only combat to that is standard markets has its benefits as well. It's guaranteed cost. Yes, you can potentially get money back, but if something happens, you're good, right? And some of these big carriers that are out there, what they do is like, so let's say Liberty, for example, right? We all know the Liberty Mutual,
This
Yeah,
song, I can't get out of my head.
yeah. I was going to
It's
say,
funny,
but I
I
won't.
literally got into my
I,
head
I,
the minute you said it.
I won't. I won't. I won't. I won't. But so Liberty's like up here, right? That's the name. Underneath them, they have multiple writing carriers where they have their filed rates. So what happens if let's say they have their workers' comp, they have 4 carriers. What they do is they have ratings on each one of those carriers, and they see where you fit. If they want to get super aggressive, they're going to put you on their preferred one, or you can get lower rates. If you're not as good, they're going to put you on the bottom. They still want to work with you, but here's the filed rates in the state, and they're going to put you here to get you in that bucket. So, standard carriers have a way to combat what you're saying, because they too have ABC tiered groups and subsidiaries and carriers that they can go ahead and place different risks into.
Yeah, I experienced that. Right, I had multiple angles, but as a contractor side, I had a very small company in the grand scheme of FedEx things. Right, I had 7 trucks. I think by the time I got out, we only had 6 trucks, but I was safe. Right, and I
Yeah.
ran clean and didn't have worker comp claims for a long time, and I never joined a captive. One used to be like when I first couldn't get into one, it was
Screw
almost like,
you.
what the hell? Like, right? FedEx is telling me I'm an extra large contractor. You're telling me I'm not big enough. And I'm like, what the heck? But then when I really talked to Brian O'Connor, a guy that's got it, runs in one of the captives on the FedEx world, right? And he told me, he's like, look, he's like, you're really better off without it. He goes, even if you have worst of the worst and everything goes wrong, he goes, it's affecting you. But if you get into this pool, he goes, and any of them have the worst of the worst, you're out. And your
Yeah,
upside was so little because I was only
correct.
just a small guy. My numbers weren't big enough. The upside wasn't enough to outweigh the cost of exposing my risk to that pool. And so,
It,
and to your point, John, and I think that's what I found out is that the longer I was in business and running clear, I kept kind of climbing that ladder because my rates were going down on an annual basis, even though my payroll and everything was going up. Right.
So, if I know the terminology, your mod was getting better
Correct.
with each year.
Yep.
the mod can, and they also have, again, like, so every single one of these carriers, if they're an admitted carrier, what that means, they have to file their rates with the state, and they must stay within those rates. If they don't, it's illegal, right? That's an admitted carrier. There's non-admitted. I'm not really going to dive into that because we're not really playing in that world. But with admitted carriers, right, if they have their filed rates, we want $1, and they have anywhere from 25 cents to 30 cents either way that they can adjust their rates. It's to make sure that they're safe. But what they'll do is they'll take carrier A, do a filing at $1. Carrier B is at 80 cents. Carrier C is at $1.20. Now they have a much larger range to go ahead and give you your rates, because they can go ahead and place you in one of those other holding companies, right? So it is an interesting way that they play with it. And David, you said something that's interesting, and I just want to clarify. I love captives. Captives are a great alternative risk solution, but as I mentioned earlier, not everyone is a fit for them. You said something that's so true. Your risk is greater than your reward.
Yeah.
Yeah, you could have gotten money back. Yeah, you could have performed. Yes, you could have done it, but dude, you're doing so well in the standard market that's guaranteed with no risk. Is it worth getting the 20 grand in 3 years back?
Right.
You know what I mean? And so that's, whereas you could be exposed to 90.
Right, and that's
If
about the exact numbers that it was what I was looking at versus my brother's company, which was 10 times the size, 10 times trucks, 10 times drivers, everything else.
made sense.
It made all the sense in the world to go. Right, so it really there's a whole lot of factors that jump into these, and that's why I think it's so good. And you said another
Hold on,
thing that
hold on,
was
hold on. I got a question.
yeah.
If he's 10 times the size, does that mean he could save 200 grand, but he was exposed to 900? Or does it
Yeah.
not work that way?
No, I mean it could be. There's a portion, your exposure goes up with it as well. At that point. But again, the savings, if you have that solid track record, right, and when you're looking at your company size at that point, the juice is worth the squeeze. So there is those swings on both
And
sides.
John, from my understanding and talking with it, it really depends on how the captives are set up because there was a portion of the proceeds of the captive were going just to the owners, and all the owners had an equal share. And it didn't matter if you were my 10 or his 100, right?
Mm,
We had one share. And so the first divvy out of payout was going per shareholder.
mm.
Oh,
Right.
now it's making
So
sense.
that's the captive manager that put that into place, because
Uh-huh.
there are other captives that are
Right.
not that
And
way.
so they're not
It's
all run that
relative to
way. And so
your,
that's where I'm
yeah.
saying it's like you got to really dive into these things and look. And that's where I was going to go to, is that you were saying how, picking and choosing of who you're kind of getting in bed with on these. I probably wasn't the guy that the first captive that shut me down wanted me to get in bed with, because I was always the one that was trying to figure out, how to increase fuel economy and how to do this and how to do that. But I was never the one of trying to figure out how to be safer. I was just safe, right? Safe was a byproduct of other things we were doing. And guys in that captive are focused on safety.
Very focused.
Right? And it was two different ways of running running a business, right? I was like I said, I for a while was not a on paper safe contract in FedEx's world. I got back to where I was a squeaky clean, tier 5 gold medal contractor. Um, I had to focus on safety to get back to that. It was a different game. You can look at my books and see that the books didn't look as good as when I was focused on profits, but it's a different way of running a business, right? Numbers
You know,
stayed up, but I was making money in different ways, right? I didn't have turnover. I didn't right. It was different animal.
it's very interesting that's happened that a lot of people think, uh, especially like the homeowners world. I'm down here in Florida, dude. Florida's getting rocked in the homeowners world for our homeowners insurance. People view insurance as a warranty, right? I feel like, oh, it happened. Let me go and let me tap into it. Let me get reimbursed. Oh, let me go tap into it. The ones that handle the risk themselves, maybe pay out of pocket for certain things and don't engage and try to keep your insurance rates clean, uh, they're going to get better rates. And not only are they going to get better rates, what happens is if you constantly use insurance, let's walk through this, right? You're constantly using insurance. You pay $100,000 in premium, right? And you use $60,000, $70,000 in premium. That carrier is upside down. The reason being, we all have our businesses, right? A carrier's operating expense is 40 cents on the dollar. So every premium dollar, 40 cents goes to paying agents, underwriters, buildings, everything along those lines, right? So if you had $100,000 right off the rip, 40,000 is going to making this go into place, right? The other 60,000 is their profit margin, right? Is your paying for your claims. So if you had $60,000 in losses, they're at a 100% loss ratio. They broke even. They made no money. No one wants to do that, right? So what happens when you make no money? You raise the rates, right? If you show someone that's profitable, you have a good partner and everything like that. That's when they can start getting lower, because they're like, oh wow, we can afford to come in lower because now history shows that this guy's on top of his game. He pays for certain claims out of pocket. They have a safe company. We can still be profitable coming in at that lower number.
So that's a great segue. What are the things that drive you crazy with your customers, your policy holders, who are contractors, FedEx, Amazon, whatever? That
Nope.
if you could wave a magic wand, they would stop doing that because it would be better for them and better for their
Yeah.
insurance.
Yeah. So, what drives me crazy? So let's talk about. At the end of the day, I'm a broker, right? That's what it is. I have my contracts with my companies. I'm in my niche. I know my niche very well, right? What everyone and a lot of folks are accustomed to, because there's a lot of agents like myself, and we're constantly going after the same pool of people. We're hitting all of them up, right? For my customers and prospects, what I try to tell them is like, hey, look, you really got to choose your broker, because at the end of the day, we're all going to the same markets. Who do you want to tell the story? Because what happens is, let's say David French comes in. I go ahead and I work with John. David Cooper comes in and works with John as well. But David French uses certain payroll numbers. David Cooper uses different payroll numbers. David French says that there's a safety program. David Cooper says there isn't. Well, let's just dumb it down to make for this example. What happens is carriers only work with one agent, right? So the first one there wins. So that we reserve the market is what we call it, right? Carrier's like, sorry, David French got in first, right? We're gonna do it. Well, David Cooper is gonna come in on the back end and say, John, Liberty was blocked. Sign this BOR so that way I can access it. And what that does is that kicks David French out. And it's like, guys, like now all of a sudden it's a back and forth, like which agent you want to work with, because here's the problem. I gave a story on this. What is David Cooper's story saying? Because it's going to be different probably. And if it's different, the underwriters will get both submissions. They're not going to automatically put mine to the side, right? They're going to take David Cooper's and then David French's and be like, why are these not matching?
And they're
There's
also
got to be
going to know
something
you're
wrong.
shopping.
Huh?
They're also going to know that the policyholder, I'm shopping it.
Oh, of course, of course. They not only do they know they're shopping it, but now they're like, what's going on? This guy, this company, John's company, is telling people different things. I'm not comfortable working with him. I don't want to offer him a quote because I'm getting different stories, and I've had 4 other brokers submit it to him. He's not serious. So, the whole idea is like, get 2 or 3 brokers to try to shop for you. When you're in a niche market, it's tough, man. Like that's not necessarily the best route to go. Um, talk with your agent, your broker, and be like, hey, look, who you going to? It's all right. Here's my list of carriers. We are blanketing the market. You really don't need to engage another broker because they're going to ask for a BOR. They're going to mess up the process. I want to go ahead and go to all the carriers, take all the quotes, and I want to negotiate with each one. Hey, I have, 10 grand here. Can you get me 5? And allow me to go ahead and do that. So that's probably the number one thing that bothers me as an
Well,
agent.
I'm going to
So
push back a little because I've worked in financial markets.
Yeah,
There's something a little squishy about the way the insurance world works, the way you explained it. It
absolutely.
seems very much designed to prevent me from shopping.
It's not necessarily shopping, because here's the thing: a carrier can't, if they're already looking at John's business, right? And then here comes David Cooper with the submission for John's business. They can't release a different quote for David French to
I,
David Cooper.
I know, but imagine in my seat, okay? I'm working with David French. I think David French is great. But maybe David French is getting fat and happy on me.
Mhm.
So maybe I want to go talk to another broker and see if maybe that broker is a little hungrier to work harder to get me a better deal. Could I at that point say, David, I know you work with carriers A, B, and C. Tell me who you're quoting from. And then I go to the other guy and I say, look, you can't quote A, B, and C, but you can go quote X, Y, and Z and see what
Absolutely.
happens.
And you know what? Here comes David Cooper behind me. It says, John, I understand David's at the market. I noticed it's blocked, but I have an exclusive. I have a carrier that I'm working with that David French does not have access to, which that happens. I have an exclusive,
Mhm.
right? That's what separates us. It's our relationships in the game, you know, and that could happen, and it does, right? But to your point, I guess I'm not really. For me, as I told you, my split is like 8% to
This isn't about
15.
you. I'm just saying generally as a business owner, you
Of
always want to
course,
make sure you want your
getting the best.
suppliers to like doing business with you, right?
Of course.
But you also want to make sure your suppliers are being fair,
Mhm.
right? That you're getting a fair deal. And every now and then you got to shop something. So it sounds to me like the better way to do it is work with the person you're working with, but find out who they're quoting, and then maybe have someone quote away.
Yeah, so that market selection, that's what we call it on my side. Hey, here's the carriers we're going to. If someone else says they're working with someone else, rock and roll, go with it. Um, but the BOR process,
Oh, that whole replace you with someone else, that's douchey.
yeah, dude, it's annoying.
I mean, that's the
It's
same
annoying.
in the contractor world. It's the same as like stealing a driver and then having to get them reassociated with the company and everything else. It's just a pain in the ass, and it's like you're just shopping it around. And I'm sitting there in the contractor world. I'm getting out of the contractor world or got out of it, but it's from a still trucking company owner side now outside of FedEx, right? Wanting to, from my side, get the best price on anything. It's the most important part, and I think probably where I've been successful in insurance in the past is the relationship you have, or the more importantly, probably your broker's relationship with the carriers, right? It's how that broker is going to sell for you. and so you get linked up with the broker that is the best salesman for your business, right? The guy that's going to write it up and say, and you can't BS it, but the guy that's willing to go the extra mile to fight for, saying, hey, this guy is a safe contractor. He's doing X, Y, and Z that's going to make him more profitable or make him a better client for you, right? As a contractor shopping the insurance game, you really need to focus on the relationship you have with the broker and the broker's relationship with the carriers.
100% agree, but insurance is a kind of opaque business from a policyholder's perspective, right?
Yeah.
And I'll give you a case in point. I'm dealing with commercial property insurance, okay? David French mentioned that they're getting screwed because of hurricanes and other things and property rates in Florida. Well, guess what? Your carriers are national. They're screwing everyone because it's a pooled risk nationally.
Yep.
So my insurance broker on the commercial property is telling me that this property that historically has been $12,000, $13,000, $15,000 a year, hey, we're really sorry, but the carriers are going haywire on us. It's $25,000 next year.
Yeah.
And when you hear that kind of stuff, yes, your relationship's
Sucks.
important. You want to trust your broker, but you also want to get an independent mark to make sure that your broker isn't maybe putting their finger on the scale. Because if you find out from someone else, no, I can get you that policy for $16,000, you're like, hold on a minute, what's happened to the relationship? So sometimes you gotta check, right?
While I agree, let me just throw out two things. One, on a personal level, I have done that same conversation the last year and a half, 2 years. It sucks, right? I own my business, right? I understand expenses, profit margins, everything like that. Dude, when I go ahead and I see 100% increase like that, I'm not fired up. I'm not going like, look at this extra commission, baby. You know what I mean? It's like, dude, this guy's going to be pissed, especially when he's super clean and there's nothing wrong. And I've gone to every market and I take this quote and all the other markets' response is, wow, that's a great quote. Stay with that. It's like, but it's double, so one, I mean, I'm not speaking for all agents, but I'm not thrilled making that.
Well, and if you're making that percentage, right, and I'm not like right, it's you're making your percentage on it. So yes, you're making a little bit more money, but I take it back to would a business owner, would I be excited to walk up to a driver and say, man, you know how you were making 60 cents a mile yesterday? Today you're only making 30, but it's only putting 8% more in my pocket.
Yeah,
Right? You're not
exactly.
excited to have that conversation. You're not going to cut your driver's wages by
No.
30% or by 50% to only put 8% more in your pocket. Nobody's happy about that.
But I'm just saying, to your point, your insurance agent, your broker, needs to go to bat for you. They need to go to the underwriters and tell a good story.
Absolutely.
And we all know that sometimes people have things going on in their lives. They're not putting in the 100% effort. Their kid's sick. Maybe they saw you in an Eagles jersey and they hate the Eagles, and now that you're on their shit list, whatever the hell it is, right? And so every now and then you want to trust, but you want to verify. And so
I'm not disagreeing in that scenario. Have an open conversation. What I want is, I'm very straightforward with my folks. And in that scenario, hey, David, and I tell my clients, I'm like, look, man, increase is coming. I already went to the market. I did everything I want. If you want to get a second opinion, rock and roll, brother. It's a business decision. I get it, right?
Yeah.
But when you have the folks that are just habitually getting multiple people involved, going to multiple carriers, messing up the issues, and then something you kind of have to think about, and it's two separate conversations that you have to look into. There's price and there's value. David said something earlier that was interesting, and it makes all kinds of sense. There's a bunch of people that are tolerant to risk differently, right? Some people are like, bring it on. I'll handle it all myself. I'll pay out of pocket. Others are like, I don't want any of it. Give me everything. Yes, I want a $10 million umbrella. Bring it. You know what I mean? So, yeah, John, I probably could have brought you a $16,000 quote, but guess what? I have actual cash value instead of replacement costs. I actually have a 10-year warranty on your roof. Anything over 10 years, the valuation of your roof decreases, and that's there's ways to get you lower pricing.
Right.
You know what I mean? Like, but is that, are you willing to take the $50,000 hit on the roof in that scenario?
to go back to my property thing, the broker I work with here in Atlanta, she's wonderful.
Yeah.
And I approach my relationship with my insurance broker the same way I approach my relationship with my attorney and with my accountant. I regularly call her, not like every week or anything, but it's how do we proactively start planning to make my business look as good as possible for the underwriters? Does that drive you nuts, or is that what you
I
want
love it,
your
bro.
clients to do?
Dude, that's cool. I like having those conversations with people. Before you said that, I was going to say you're my favorite client if that's the case. Um, because the ones that really care and get that and are actively working on that, it makes a difference. So let's kind of shift this like to FedEx, right? You know, um, David, you mentioned that your money saving was in your driver's turnover rate kind of went down, right? Dude, that makes a difference. You know what I mean? If you have longevity, so let's talk about, again, this is on the liability side a little bit more. So physical damage is impacted, cargo is impacted on this as well. But if you have poor drivers on your policy, carriers charge for that.
Mm-hmm.
By the way, cargo carriers, they go ahead and they look at those MVRs as well because there's $150,000 worth of stuff in the back there, and if it's damaged, they found out John has a DUI 3 years ago. Why are we letting him drive? So what happens is when you're like on top of your game and that driver turnover shrinks and you're strict and you don't just let anybody in, that does impact you in the long run on insurance costs, right? Because the underwriter is going to be like, wow, great, great employees, longevity, they have telematics, and their MVRs are clean. You know what? 10% discount. We'll do it.
Yep.
Versus John has 3 red light runnings and a speeding. David Cooper has, child alimony owed and has been suspended 3 times, and David French has, 3 reckless drivings. They'd be like, ugh. Yeah, he may be great on the job, but dude, he has a history. Like, we're charging 10, we're hedging for this
Yep.
to come through. So like that stuff does matter, to be proactive to your point about your business, what you can do to be on top of it. Vehicle maintenance is a big deal. I don't have to really dive into that one much. I feel like it's pretty self-explanatory why we want our maintenance to be, top notch. Bad tire can wreck not only insurance but the vehicle itself and the cargo in there. So all those stuff that you really put in your training and the care for your employees goes a long way with these carriers when they see that.
Well, it's all right. It's math. It's all actuarial science. I
Yeah.
almost went down that avenue, and kind of glad I didn't. But holy cow, right? When you look at everything they look at, and you can tell the story, and you can make the pitch, and then you have the data to back it. To your point, with the telematics and with everything else, and you can show that. And that's where what we found is that I started pumping a ton of data to my insurance broker, and he was
Yep.
pumping that along with, hey, these have
Love
been the
it.
same drivers. They're not at like literally pumping logs, pumping everything, showing that we aren't bringing in other stuff, because we found that cost us an arm and a leg. One year is that I mentioned my brother had a company too. Well, we were bouncing drivers back and forth between the 2 companies, and
Co-employment, they hate that.
oh Lord,
Hate it.
worker comp took a hit, right?
Yeah,
But
hate
figuring
that.
all that out, yes, we like honestly, it made it to where I was able to pay my drivers more because it, to an extent, it paid more. Like it saved me money to keep them around.
And it's hard, right? As running a business, you kind of look, hold on, wait a minute, you gonna have to pay more? No one likes to see it's like when everyone tells me, oh, if I get telematics, do I get an automatic discount? It's like, well, yes and no. The yes is some carriers do have a little box they can check that'll give you like a 3% discount. But what it's saving you is in 3 years when your loss runs are low and you go back and you're able to send the data and say, hey, look, the guy that was with you that didn't have telematics that got a 20% increase, you only got a 5% increase, right? Can you realize that savings right now? No. But look, I don't think many of us are in business for a year. We don't want to be, right? This is idea of
It goes
longevity.
back to where you started, right? A lot of guys have the head down and they're thinking, I need it today, now, and they can't think of that, right? And
Yeah.
I think it's the reason that banks, right, they open up the books big time to companies once they've hit that 3 year mark and everything else.
Oh, of
All
course.
flows
Same with
through.
insurance companies.
Oh
You
yeah,
you
yeah,
learn you learn
huge
so
difference.
much after that 3 year
Yeah.
mark.
In the FedEx world, for owners that have multiple entities, and oftentimes that's a good liability, and there's other reasons for it, but they own each one outright.
Well,
They often use a PEO, and they can allow a driver to drive for one company on Tuesday and cover a driver in the other company on Wednesday if somebody's out sick.
oh my
But I
gosh,
heard you
PEOs.
say they hate co-employment.
Hate it. Hate it. Yeah. Um, well, man, that's a whole other can of soup, right? PEOs, professional employer organization, also known as employee leasing, right? So PEOs, dude, it's like I should have been a PEO, man. They make so much money. They make so much money, and what they're able to go ahead and like charge on the taxes, because they handle your payroll taxes. They add their little vig, the FUDAs, UDA, and everything, and then they collect their rates on their workers' comp. But anyways, so PEOs have pros and cons, right? Most companies, if you get wild with losses, a PEO will step in and is able to go ahead and make money elsewhere, and they'll give you the lower rate on the workers' comp, right? And they're collecting it somewhere else to do so. Um, you know, Health insurance, you can bundle it all together. It's easier, but at the end of the day, they're no longer your employees, right? They're leased back to you. As much as you want to say they are your employees, but on paper, again, there's no coverage for them if that payroll wasn't run either. So they got their hands very deep in that. You also can't control your costs with a PEO, right? You mentioned something earlier, John, when you say mod. Not a lot of people are privy to a mod, which is a shame that agents aren't uh, letting everyone understand this, right? Because you can have someone that has their come to Jesus moment and make a 3-year plan and say, I'm going to start investing now, and by year 3, I'm going to get it reduced. Or you can go to a PEO, get a little bit of savings now, but that little savings goes to the 3 years. Whereas if you decide to do it on your own on that 3rd year, you can actually be lower, right? And so, PEOs, so let's go into the PEO world where you're saying where you might have someone bounce, right, on that. Co-employment is an issue because David Cooper and David French have 2 trucking companies, and we're sending John back and forth, right? Well, you know, John could go ahead and say he was in the middle of working with David French, but he was really working for David Cooper. And then the carriers, look, you're playing with their profit margins. If a carrier can push off the expense on someone else, they're going to do it, right? And so you're going to have 2 carriers being like, whoa, John's been working the same days. When did he work for David French? When did he work for David Cooper? There's lines are blurred,
And I can tell
right?
you right now, it's did he hurt his back when he hit the bump in David Cooper's truck, or did he hurt his back when he was pulling the 5th wheel in Jonathan Cooper's tractor? And they'll fight that real hard.
Oh,
Very.
well, I want clarity on this. Co-employment, where the guy's working for 2 companies, 2 owners, 2 carriers, is one thing. But what if David Cooper is a contractor and he has 2 entities and the driver's jumping between the 2, but it's with the same carrier, just 2 policies under 2 different companies?
So that's where I think we
Okay.
went a little bit different route, because that happens a lot in the FedEx world too, where you'll have
Yeah.
I've been there, right, where I've got myself, I'm the owner, and whether it's the same 100% ownership group or it's just the same majority owner with the same AO, but you'll have multiple entities like ownership groups all running under the same contract. One could be in business for 1 year, one could be in business for 7 years.
So there's 2 ways to do that, really. Workers' compensation carriers would like to go ahead and have it under one policy or share the mod at least, because at the end of the day, it's the same business, it's the same owners. That experience should follow that person, right? That business owner. What you could do is you could just go ahead and add them as what's called additional named insured. This policy covers David's trucking, and then there's Jonathan's trucking is named as insured as well. So we can capture both premiums. At that point, if it's like the same business, sure, rock and roll, that makes sense at that point. But they're just like, carriers don't like the co-employment. In that instance, they're accounting for the risk. They're collecting the premium. The payroll is already being run through, and they're calculating, and they're getting the premiums for both companies regardless.
So that's not
So
a hard red flag when it's like that.
no, no, they're not really overly thrilled. Okay, what is Jonathan's business like? Is it as safe as David's? But no, that's not as much of an issue. The issue is where it's two separate companies, um, and that person's bouncing back and forth. Because I'm assuming, David, you and your brother didn't share ownership.
We didn't have like ownership, right? That was the issue. So that's where
Yeah.
they were wanting us to go to. I mean, really, they were wanting us to go to the PEOs, and if we would have been under the PEOs, we would have been fine. But that's where I was the small company that was squeaky clean. I had hit my third year, and where the PEO was saving my brother a ton of money, it was. I mean, it was going to make mine way more expensive than what I was paying.
Oh yeah. Oh yeah.
So it wasn't the fit for my business. I think that a lot of these programs are almost John. We've talked about it on the fuel games or on the different charges, right? If you're the one that's doing better than the rest of the field, you're making up for somebody else's losses, right? I didn't ever want to be the one in a captive, in a PEO, in a something else that was performing better than everybody else and making
Yeah.
up for somebody else's losses, right? I just wanted to stay on my own. Versus if it was I'd had some losses, it makes all that sense because then they kind of distribute out your gains.
Right. Let me ask a different way. Folks watching this, you're going to be in Dallas in April. We're recording this at the end of February, right?
Yeah.
2025. Somebody comes up to you. What are you hoping they want to talk about with you in Dallas besides Fortitude Insurance?
Man, I love hearing people's problems, right? I love hearing what's going on. What is your pain points that you have? Because in insurance, if there's a pain point, there's a solution. Wherever in life, right? If there's a problem, there's always a solution, right? And I feel like that we're pretty capable and competent to go ahead and provide those solutions. So for me, when someone comes over, you know, it's so, what's the best rate you can give me? Okay, I mean, yes, I can. We do. But quoting's the easiest part in the insurance, right? I can blast out a quote to carriers. Let me go and get the best rate. When it starts becoming challenging is getting the right carrier, making sure claims get paid out, making sure that the issues that you're doing are, yeah, I have a tough conversation with my clients and prospects, whether if you like it or not, that's on you, but I will give it to you straight, like, hey, the reason why is because of this, here's how you change things. People challenge me on a lot of things, and I welcome it because it engages in great conversation. But that's really probably for me. I like when folks come up to me and are like, "Hey, I'm having this issue. What's your thoughts?"
Okay, I got one for you to think about before we get to Dallas.
Sure.
In the FedEx world, you have assigned routes and unassigned routes. Unassigned routes each day, you don't know if you're going to go. Variable miles, you don't know where you're going. Assigned routes are much more predictable.
Yep.
It is possible for assigned routes and unassigned routes to not go at all for a period of time. It's also possible for them to simply go away. FedEx loses a customer in an area. They don't have that route. Their amount of volume changes in a certain geography. They change their routes. Your route went away. They're not guaranteed perpetually, right? They can go away on a day's notice if need be. You can also do things where they would take away your routes, right? What would
Yeah.
it look like to try to create an insurance policy against that?
Yeah. So it's a big thing that was happening in the Amazon world, right? Because Amazon pulls contracts pretty easily, right? If they want to. So there's it's called a micro captive, right? And what you can do is you can go ahead and set up, you create a small insurance policy for this, not for your physical damage, your workers' compensation. You create your own other liability policies, right? And
A
you
route
could,
insurance policy.
yeah, you could do that. Now, do the premiums make sense?
Right.
And so what happens with the captive, when everyone, a right captive, is it runs through an actuary. And that actuary is going to sit down and be like, okay, what are the chances of you losing your routes? Okay, you lose your routes. How much is that going to be? And for how many years? And how long are we going to insure that for? Oh, wow, that could be $1 million in revenue. Okay, you're not going to pay $2,000 a year for something like that has a probability to it, right? They're going to want you to pay to squirrel away money to go ahead and fund something for that.
Sure.
So there are solutions to that. They did that in the Amazon space, and what happened was it was so new, right? Everyone was like, "Hey, I would do that Amazon guarantees were top performer, and they created these little captives, and the actuaries were putting it into play, and folks were losing their $4 million revenue business overnight. Well, they had already set it up. They had paid out and paid their premiums when the actuaries thought it was a low risk. And after the third time, actuaries pulled back and were like, "Whoa, there's a lot of money getting paid out with a lot of a little premium coming in. We got to adjust that." And so there's a way to do it, but again, insurance, you're hedging for it, so you're putting money into that in the event it comes. So yeah, that's in my mind how something like that would go.
I was gonna say that's a tough one to insure, in my opinion. That's a
Very.
Right. It's the same one on the same side. It makes it to where you have to find the insurance company that would have the appetite for it, right? That would
Dude,
believe in it and go for it.
you'd have to go to Lloyd's of London, and they would have to create it, and they would scrutinize. Think about what are some of the revenues of these companies, and you're trying to replace that rev. That's.
I think you'd all have to get everybody within the captive to agree upon like a 40 cents on the dollar payout, right? It'd have to be something. Yeah.
Well, in that captive, I said micro captive. That would be actually a captive specifically that you're funding under yourself.
Yours. Yeah.
Yeah. So there's again, captives are robust. Ooh. Yeah.
But it just seems to me that I look at guys who go in and they say, "I'm going to buy this other contractor's business for $4 million. They've got all these routes." And yes, there's equipment tied to it, but a big piece of that these days is the routes.
Oh, yeah, of course.
Now, if you spend $4 million to buy a shopping center, at the closing, you have catastrophic coverage on the property, fire, flood, whatever, right? Yet these folks are signing personal guarantees on a $4 million business acquisition loan, and there is no coverage on the loss of those routes. And if you lose those routes, what have you got? Equipment.
Yeah,
it is. It is kind of crazy to think about that you can get like key man insurance on a manager within your business, but you can't get insurance on the route that, at least in the FedEx world, has a tangible value. Right?
So I'm gonna throw something out here, just a food for thought here. John, you said something. I think you alluded to one of the safest bets and assets out there, real estate, right? You're right. Real estate, it costs money. You have to feed it. You have to do right risk management and everything. Insurance costs, I get it. But you're right. At the end of the day, that shopping center is going to be there. Folks are going to want to be there. Malls are not that way. David, you were talking about this individual prior to us jumping on here. There was a very large tech company that was $100 million, you said? 100 million, was it? And how overnight it got wiped out. I mean, we're in business. I constantly have someone trying to cut me out, right? John, same with you. You're technology, but that's the business risk that we kind of jump into that. And yes, you can insure it, but you have to insure it at a right premium, because $4 million is a lot of money, all right? Yeah. for something that stats show 1 year in, businesses fail, right? So you would think, if they're going to insure that, it's tough. That's tough. So that's my thought. At the end of the day, we're all risk takers here. We're all betting on ourselves, and I would not want to go work for someone else. I don't know about you guys. I won't for the rest of my life. I work for you guys here. I work for my customers. I love that, but I'm not having another boss do that. That's why I think everyone here listening as well is in that same boat. We do want to jump in. We do want to kind of grind and have our own thing, and we do want to grow and do that. But that comes risk. There comes risk.
My favorite, as a mentor told me years ago, work for yourself, because your boss will be full of shit, but your own shit don't smell so bad.
Yeah, it's true. It's true.
David French, a million thanks for taking time out of your day. I know you're a busy person with your own business to run, for sharing your thoughts, your insights. It's a delight to talk to you every time, and I'm looking forward to seeing you in person here in a month or two in Dallas, and I look forward to our next conversation. David Cooper, thank you for joining us.
Yeah. Gentlemen, it was great. Thank you so much for having me, and really enjoyed this, and look forward to more good conversations in the future, gentlemen.